All right, all right, all right. I hope everyone now can be able to see my screen. I want you guys to confirm on the chat section if you're able to see my screen. I want you guys to confirm. All right. I hope everyone now can be able to see my screen. I want you guys to confirm on the chat section if you're able to see my screen. Kindly confirm on the chat section if you can see my screen so that we can proceed with our meeting. On Zoom, I'm able to see 15 members. So I need to see several reactions so that I know we are all together. All right, okay. So, perfect. I can see Yano is in the meeting, Dalix, Esther, Maureen, Jonah. Wow, that's nice. Okay, just a minute. I'm trying to set up something here. Just a minute. All right, all right. Sorry for that, but I think now you're good to go. So I'm going to spend a few minutes here so that we can. I'm going to focus so much on giving you guys uh, some short-term swing trades, or rather mid-term swing trades, and then as well I'll be able to give you updates as we move on throughout the week in terms of the intraday. So it's very important as a trader to synchronize or to sync fundamentals with the technicals, because actually what moves the market are what moves the economy is the fundamentals, like the data, understanding how the country is performing, and that's what actually determines the aspect of speculation in terms of the strength and the weakness of our currency. So this week, it's starting tomorrow, a few hours from now. Tomorrow, Monday, at 4 a.m. Kenyan time, we're going to have RBA. The government bullock will be speaking. That means we're going to have some impact on the Australian dollar. During the London session at 9 p.m., during the New York session at 9 p.m., we shall also be having an effect on the pound. That is, we're going to be having a speech from the Bank of England by Bailey. And then on Tuesday, the whole day is going to be a bank holiday for Japanese yen. And since we'll be having a bank holiday for Japanese yen, that simply means we might not really have good volatility on that day. On Tuesday, these are a day that I don't like. Whenever I see such kind of fundamentals whereby we have Euro, Germany flash manufacturing PMI, you also have Germany flash service. Unless this data comes out clean, if it comes with mixed reactions, chances are you're going to have a shitty price action. So that means on Tuesday, I might be trading maybe during the New York session, and I'll only trade after the data is out, because whenever we have such kind of mixture of news, it brings a lot of shitty reaction, especially when you have different or a different or a mixture of reaction in terms of, other news are coming out negative, others positive, and all that. So it brings a very bad presentation. But whichever the case, we'll be able to observe presentation and see what happens. Then on Wednesday, 4:30 a.m. Kenyan time, during the Asian session, we're going to be having CPI for Australian dollar. So those guys who are trading Australian dollar, make sure you take note of how the CPI data will be out. On Thursday, we are having CHF rates will be out. That is during the London session. And then at 11 a.m. as well, we're going to be having, at the New York session, that is 3:30 p.m. Kenyan time, we are going to have the unemployment claims data will be out. And then we'll also be having the final GDP data. Eventually, we're going to wrap our week on Friday. During the New York session, we're going to be having at 8:30 a.m. New York time, that is 3:30 p.m. Kenyan time, we're going to be having a GDP for the Canadian dollar. So expect some also move. And then we'll also be having core PCE price index, the dollar. So that's how basically our week looks like fundamentally. So as a trader, it's very, very important to always observe and get to understand what we have on our economic calendar. It is very, very important to take note of what is going to be happening. So I want us to start by checking. We're going to dwell so much on higher time frame. Can you guys get me? Somebody to confirm. If you can get me loud and clear. So on, we're gonna check on the dollar. All right, thank you. And see John is there. So I want us to check on the dollar index, and we're going to look at the key zones. We're gonna start with the monthly perspective. As you narrow down to the daily cycle, we also check on the weekly cycle so that we see what we have. Now, one thing about trading, guys, especially the strategy that you're using to trade, if you follow everything right, and you apply it in the right manner, and you be patient, you're gonna make money. The problem with people is that most of the time, people have got this issue of patience, waiting for the right setup. I always say that money is in waiting. If you can't wait, sometimes I get people who are telling me, they ask this funny question, why haven't you traded this week? They're like, I've seen people making money, or I've seen this and this. No, if you have an edge in the market and a strategy, you don't need to chase the market every single day to make money. But if you follow the approach that you're using in the market, like for us, it's simple price action and our deep liquidity concept that we use. All right. So if you follow everything right, maybe in terms of the cycles, trust me, you're going to make money. The only problem comes when people don't have the patience. You see, as a trader, generally in a month, you might have bad weeks and good weeks. If you're a day trader, you'll have good sessions and bad sessions, or you'll have good days and bad days. And basically, that's how trading happens. So if you understand that very well, you're not going to give yourself a lot of pressure interacting with the market. So when you look at the dollar index, we've been bearish for a couple of months. In the month of July, we were bullish. And if you look at let me just delete all these drawings so that I can break my charts from scratch, so that we guys will be able to understand. So if you look at the monthly time frame, let's even look at 6 months. 6 months time frame, the last 6 months that we had, the previous 6 months candlestick, we were bearish, right? We are bearish. And if you understand this was a high. Let me show you. We have these keys on. Okay, we had this high. Then we had this low. I want to break it down for you guys in a way that you'll understand. So initially, the market created this high at this particular area. And then this high was broken by this high. Then we had this high. So this was the last area that we expected probably price to come and react from and continue pushing up. But what happened? The market traded below this. So if you go back to the candlestick, realize that this area, we have a type of liquidity. We'll probably say this is type 2. And then this massive engulfing candlestick is an indication that bears are increasing in momentum, or rather bears are taking over. But again, where we are, these are key zone. Why? If you use your line graph, you realize this area, it's a zone we call pure, it's more of pure bullish, right? It's more of pure bullish. So we expected reactions from this zone. So if you go to 3 months as well, before you go to monthly time frame, you realize price has never traded above 114 point, around, let's say 114.6 price level. The market has been ranging on this area for a couple of months. The market has been ranging along this area for a couple of months, right? Then price came and broke this impure liquidity. Let me show you. Price came and broke this impure liquidity. This is impure liquidity, which is also a flip zone. You see this area, the market came and traded below this area. If you align your wicks, you realize that price traded below this. And the moment, the month of April, the last candlestick, the last 3 months candlestick traded below this zone, it was an indication that you might continue pushing up. So from the monthly 3 months point of view, we have an area of liquidity here, which is this is type 5, right? Then at this area where we are, these are flip zone. These are flip zone, sorry. It's a flip zone. That's where we had this reaction. So from there, if you go to the monthly time frame before you go to the daily time frame, you're going to realize that the reason as why price is reacting from this zone, initially, this was like more of support. Initially, this was more of like support. It's a key zone. And this support was broken. Then later on, the market came again, traded above this support zone. Are you together? Initially, the support zone was broken. And then after it was broken, it's now acting as a resistance. The support zone was broken. It's acting as what we call, if you understand the break and then retest. So it's becoming a key zone, which is more of like liquidity engineering. A flip, which was a failed liquidity engineering. Because if you narrow down, you'll see some sort of liquidity engineering on the monthly time frame. So that's why we are having this reaction, or rather, that's why we had this month of July reacting in a bullish move, because this key zone, the 98, let me say the 98 all the way to the 96 level, it's a key zone which has some significance in terms of it's an institutional level in terms of price. Now, if you narrow down from monthly, we go to the daily time frame. We go to the daily time frame. There's one thing that remains constant. We already understand on the monthly time frame we are strongly bearish, but on the lower time frame, like the daily time frame, we had this zone which had given us a shift. See here, these are shifts. And then we have, before that shift, we had a transition here, right? And this market has come to the extreme point. This is where I was telling you guys, I was teaching you about validation and invalidation points. There's also confirmation of the structures. So initially, the market came to the extreme point on the daily time frame, reacted below this, but we have not had anybody candlestick closing below that. But if you check on the weekly time frame as well, you can see we have this type of liquidity. Simple price action. This is bullish engulfing candlestick. Other people call it an order block, but for us, we call this type 5 area of liquidity. So yes, price has come and reacted below this. And that's why when I'm telling you guys to do analysis, when you get your end to the extreme point, you call them the furthermost deviation. At the end of the day, you're going to realize if you put your stop loss and then you get some extra, when you do proper refinement, you might not be taken. The market will come to the extreme point, but chances you won't be taken out easily. So looking at a couple of weeks, what has been happening, you can see we've been having a lot of rejection to the downside. And then the market has come down, cleared all these liquidities that was here. So that tells me there's a high chance that this coming week, dollar might be pushing up. But I want us to go to daily time frame. We're going to compare weekly cycle and daily cycle, and then we're going to get clarity in terms of direction of dollar before I check other pairs. Are you guys learning? Clearly, what you guys can see here, we have this extreme point upper chini. We have this extreme point. That's where price has reacted from. But what we had, this is an area of liquidity, which was a weekly area of liquidity. You can see we have a structure here. No, these are the daily area of liquidity, the extreme point. Sorry, the weekly. If you go to the daily, we have a structure here, and then you have the extreme point, and you can see it on this kind of six. So price has really come here tapped. So we could probably be heading to the upside if price clears. I want you guys to understand this very well. At the moment, we have this price zone. We have that area, and we have this area, and then we have this low. So number one, with that, this is the extreme point. Let me show you. For the buys, for the daily confirmation, just a moment. For the daily confirmation, we have this type of liquidity that's like 1, so that's another level. Now, these are the 3 levels that I'll be watching out in terms of price. These, simple price action. This is in pure liquidity. You see this area? It's in pure liquidity. Price has traded below this by clearing this, and then the market has also taken this low. All right? So that simply means there are 2 things that I'm expecting. Since this last swing point that caused this high has been taken by us having body candlestick closing below this zone, and then right now the market has pulled back to this area whereby we had a lot of buying orders accumulated. So that tells me, for me, I just follow what we call, I follow structure. Okay, I will leave this here. You see this area, we have this type of liquidity, which is daily time frame, and that's like more of type 5. But above it, we have a wick that came to consume this. Is this wick that came to tap on this area. Right now we have this. We have this type 5. It's a special case type of scenario. Those guys who don't understand that, of course, if you are not trading our strategy, you might not understand what we're talking about. But maybe let me say that is an order block. All right. Now this area is important. All right, but let's check on what is happening on 4 hours. Indeed, on 4 hours as well, these are key zone. You seeing that? Price was being rejected, I mean supported there, then the market created a structure, then boom. Came all the way to the extreme point where we had this. I'll start using, nitaanza kutumia Kiswahili kwa the next meeting after nimefanya some introduction to, yeah, nitaanza kutumia Kiswahili. Kwa maana Wakenya wengi wanaelewa Kiswahili na Kimombo ama Kiingereza. I'll try so much to do 90% Kiswahili, 10% English. But it's not easy, but anyway, I'll try to nitajaribu sana kutumia Kiswahili ili niweze kuaccommodate kila mmoja wetu. Hey, Kiswahili is interesting. Anyway, so we have this area and we have this key zone. I want you guys to take note of those zones that I'm marking so that you have a clarity in terms of long-term projection. I don't like a lot of noise when it comes to the charts. So we have this area. I want you to look at what is happening. So if I go back to the daily time frame, our weekly area of liquidity, which is on the daily time frame, is the daily wick. But we have had a reaction to the downside. Yes, I'll still use French Kombali as well. Now we go back to 4 hours. This is our area of interest, right? In terms of either buying up or going down. So why is this area important to us? We had this swing point. We had this swing point here. And we also had this swing point. Those guys that have been teaching something to do with 0 level, 50% level, flip 1, 2, and all that, you'll understand this. Now, of course, this was a news effect that week. The market has to come and fill this week, right? So the possibility is now that we have had a long week rejection in the downside, then price has pushed up. This is an indication the market might be coming to clear these equal highs. I'm talking about this. And from the lower time frame, you know, sometimes we get the story on the lower time frame. If you look at the structure very well, this point is like a shift. That's on 4 hours. This is like a shift point. This is like a shift point. And then this area is like our inside formation. All right. And when you look at this inside formation, we have 2 strong important zones. So if you check it like this, you will realize here we have some sort of liquidity engineering. And this liquidity engineering could be acting, let me see. If it is a failed one, then just know that this zone is going to be broken, the upside. So, okay. So we have liquidity engineering here. Price has traded above it, but we haven't clarity. So once the market opens, there are 2 things that I'm going to focus on. Number 1, I'll be looking at how price behaves on this type 5. You see this type 5? I'll be looking at how price behaves on this type 5. If I'll have candlestick closing above this area, then there's a high chance we'll continue pushing upside. But before we push up, we'll expect a slight retracement before the market goes up. Now, on the downside, we have this area of liquidity. Let me show you. We have these areas of liquidity like this one here. And we have this one at the extreme point. So let me go to H1. So this is another example of impure liquidity. Price went up, came back. On Friday, it's only that I was committed. We had a very nice setup for gold. We were supposed to buy. I always don't like trading when I'm on the move and I'm not on the chart. Sometimes you can make, but there was a very nice setup on gold, which I'll show you guys. Now, here we have these prices trading at that zone. We've had a reaction from, I think here we have some sort of, let's see. We have some sort of liquidity engineering, and that's where price is reacting. So once the market opens, I'm expecting price to come a little bit lower to these, this is the potential area. Then from that area, since we have, yeah, I think around this zone, then now we can continue buying. All right. But the good thing is we'll be having a session on London in the morning. I'll be able to give you more updates. So I'm expecting something. I'm expecting a reaction, price to come down here before we push up. I don't know if there's somebody who understand why I'm doing that. So I'm expecting the price to come here. I confirm that on 1 hour. I'm expecting to see dollar coming to this zone before maybe you come to take this high up. But during the London session in the morning, I'm going to give you clarity on the same. If you go back to H4, that's what we have. If you go back to weekly, go back to the weekly time frame, that's what we have. I'll expect price to clear those zones. If I go to monthly, nothing really is clear. You have a banker block. Actually, that's the best area for me to see a reaction. In 8 hours, I can see a result called a banker block. I'm expecting dollar to come down here because you have this imbalance, and it's a key zone. Here we have pure bullish, but I'll go for the lower side, the extreme point of the pure bullish, right? Because market reacted slightly on this. If you check on these weak reactions, price broke above, came reacted on that, and then went up. So two things. I expect price to come and clear that trend liquidity. Expect price to clear that trend liquidity, this one. And then now we can continue pushing to the upside, right? If the story changes, I'll give you also the idea. But remember this zone, if you go back even to 4 hours, if you remember this zone, we have a structure here. So what does that tell you? If we are expecting to buy from here, then that means once the market opens, dollar might continue selling. So which means other pairs like Euro USD will be buying, right? So that's what you have on the dollar. That's what we have on the dollar. What we have on the dollar. So expect price to come here before we come to take out that high. But these are very nice zone for a reaction to the downside. Are we together, guys? This is a zone that I expect because we have a shift and an inside formation. Now let's look at Henry. I think you had gone through Euro USD and GBP USD. Henry, can you hear me?
Yeah, I can hear you.
Had you gone through Euro USD and how do you call it?
Euro GPY. It was Euro GPY GBP. I was going through GBP GPY.
Okay. So let us look at Euro USD as well. So in Euro USD, we had this trade that we are having since last the other week, and see clearly what the market has done. So from the monthly point of view, this price action here is very shitty. Such price action on a higher time frame sometimes that confuses you. You see this one? Yeah, like clearing my chart. Let me just delete everything so that I can analyze everything afresh. So we have just map our areas of interest monthly. On monthly, we have this high, thank you, and we have this low. Right? So you'll go to daily time frame. Before that, you also need to look at here, have type. These are type of liquidity we call type 5. So that's our extreme area of interest that has not been fully been touched. But the most immediate area of liquidity we have is currently this one, which is more of like, I think this is more of like type 3, if I'm not wrong. So this is that's why price has touched here. The first touch gave out this reaction. The down, if you narrow down to 1 hour, you'll be able to see clearly. Now, at the moment, you go to the daily time frame, we have initially we had a transition and a shift. I want you guys to be keen on what I'm talking about. We had a transition here and a shift, but now this low, sorry, this high has been taken out. What does that tell us? That tells us that it has been taken out by this candlestick closing above 1.183. No. Now, when you narrow down, you can clearly see that we have simple price action. We had this resistance level, right? We had this resistance level, which has been taken out by this structure, then boom. But before the market went up, we could focus on this area. Reason being, we have this structure here. Let me slide. We have this structure hapa. Kuna hii validation, sorry, the invalidation point, and we have this validation point. So we have this validation, and we have this invalidation point. I know it's late. I know it's late. People don't beep. Sometimes people are not patient, but let me try. I'll try my best to deliver something. Then tomorrow we shall proceed. So we have that validation and validation point. So as I was telling you guys that we expect dollar to do whatever I told you. So that simply means we have these. This is our validation. Yeah, we have this validation point and our invalidation. So this is an area you're supposed to look for buys. Now, you can't just take buys randomly like a confused chicken. You need to have clarity in terms of liquidity. So as far as I'm concerned, I'll go lower. So if you understand liquidation, so price went up, came back in this area. Again, price went up, came back, consumed this liquidity, and now we have this. This is what we call the order flow confirmation. So we have this is the last area that tuko nayo, and this is the last area that we expect to see the market maybe coming. So down at the most extreme point, we call it bullish different. We have that area, which is more of type 1. So if I narrow down to 1 hour, but before I go to 1 hour, I'll check on 4 hours. Number one, in this case, around this area, we have what we call impure liquidity. Yes. What is this? Anyway, I'll talk to you. Talk up. So we have, sorry, we have these, we have, what do you call it? we have okay, I want to explain this one. Just a moment. So on the daily time frame, I know where the confusion. Okay, we're on the daily time frame. So we have this area and we have the extreme point. So let me go to 1 hour. Perfect. On 1 hour, two things. Price has confirmed. Price has confirmed. Okay. This is the low that caused that high. We have price, this swing low caused that swing high. So we have a body candlestick closing below this area. We also have an imbalance here. And then on top of that, we have liquidity engineering, which is here. It's an Itoy line, Itoy confusion. So we have liquidity engineering around this area. So what does that tell me? The possibility. So I'm expecting, since we have here an imbalance and we have liquidity engineering, so I'm expecting if dollar is going to react based on how based on what I've just told you, then that simply means these markets will come to this level, and then we will sell. And when we'll be selling, we're going to focus on this anywhere here before we continue buying. All right? That simply means that's what we have. But you guys are lucky. Tomorrow in the morning, I'll do a session. Once the market opens, I'll be up very early in the morning. I'll check price during the Asian session. During the London session, I'll be getting entries for us. So tuko na hii area. I hope tuna flow. Tuko na hiyo area. Na tulipata wapi? Kwenye daily time frame. Sorry. If I go back to the daily time frame, we realize our target in terms of where we want to buy from is at the extreme point where we have liquidity. This is type. Okay. Basically, for those people who understand the common term, that is an order block, bullish order block, bullish engulfing candlestick pattern or structure, type 1 area of liquidity. So this is the zone that I expect price to come before we buy. Mpaka hapo tuko pamoja. And once we buy, we'll be trading above that zone. So if you measure the pips, this could be some nice midterm swings. That's like 200 pips, almost to 50 pips. Are you guys there? You know, when we are online, I might be yapping and guys are not even here. I need to know if you guys are here. People are sleeping. I need confirmations in the chat section. I can only see 2 people. The rest of us are sleeping. Others are in the kitchen. You know, sometimes I know I can be harsh. I need more confirmation, guys. Perfect. So I want you to understand what I'm doing. I don't want just to explain things that maybe you're not even with me. Now, I started my analysis from monthly, I came to daily. And the reason I have marked this area, this is my invalidation point. This is my validation point. Since I've seen a confirmation on 1 hour that price will continue going deeper, then that means I'll be interested to look for my buys around this area. Of course, we'll be doing refinement in the morning so that you get entries. You see, that's like 45 pips. You can't take trades like that. So we're going to refine during the London session, depending on how price opens, and then we'll buy. So why I've had this, if I go back to 1 hour following the cycle, I'm expecting price to come there to clear these liquidities and go for this liquidity engineering and sell. But if again price comes here and trades above this, then that means the story will change. Because the first thing is always direction. If you don't understand direction, you will struggle. You will suffer. In fact, you're going to suffer. So the best area you're actually going to buy from is down here. Huku tuko na kitu inaitwa, I can see some sort of inducement. I'm also able to see some sort of reactive. If I go to 15 minutes, it could be normal liquidity engineering, but on 1 hour, it's more of reactive. You see. I'm able to see some sort of reactive and normal liquidity engineering. So at that area, that's where I'll be expecting. So in short, what I'm trying to say, once the market opens, there are two things that I'm expecting. Either price might continue selling to come here before we buy, or we're going to have a slight reaction to this zone to facilitate a push to the downside before we go up. Why am I saying so? In this case, this is an area of liquidity. This is a validation point, and its invalidation point is where? Up here, right? And since we have this validation and invalidation points, I'm expecting price to go to the extreme point. In this scenario, it's bearish different. So that's where I'm going. And what I can be able to see, I'm seeing liquidity engineering as my confluence of entry. So if I measure the pips, it's 22. So I know if I go to 15 minutes, I could refine better and get a trade that will deliver us to the downside. Because at this area, I don't see reasons why to buy. You know, I always tell you guys, although you have already had a reaction here based on this impure liquidity, you have had this reaction based on this impure liquidity. See? But again, if you check keenly at this zone, at this area, we have a type of liquidity, which is type 5. So again, down here, you know, liquidation is something that here we also have a type 5. So it's like either price breaks to the upside or comes down. But for me, I'm highly on expecting price to push up, then we sell, and then before we buy long term, because you have seen what I've explained on the dollar. I hope that is clear. I'll still be giving you guys updates tomorrow in the morning during our Discord stream. So because of time, allow me to talk about gold, and then we can end it there. I don't want to go past here because I know guys can be bored. Sorry, we came in late because I was traveling. So let's look at gold. Is there any question on that? Let's look at gold. All right, gold. Looking at its liquidation, I want you guys to understand something. Looking at its liquidation process, number one, we have this area, and this area, it's low, it's around this area. So this becomes its invalidation point, and its validation point is around this zone. That's why this market came to the extreme point where we had inducement. If you go to the lower time frame, you'll be able to see it. I remember there's a trade I gave out. Was it on Thursday or Friday? There's a trade, a very nice trade I gave out. Guys were scared to take it. Those who took it before the market sold massively during the New York session on that same day. It delivered, I think, around 200 pips, but our target was around 161 pips. So, for gold, this area, or rather this structure, is the zone that caused these highs. Now, the market, during the FOMC, I remember I'd given a trade idea on that morning whereby we wanted to sell from here. But because of the news effect, of course, things got messy. So this was our area of interest where we wanted to sell from. See, price from that area, it's only that we had news. And remember those guys who were on that session that we had on that night, you saw me doing it live, you guys would be able. So the market dropped almost 596 pips before it eventually bought massively. Now, if you look at the structure from the 4 hours perspective, these are swing points. These are swing points that causes the lows. Okay, there's this low that caused this high, another low that caused this high. And if you look at the price action from the 4 hours point of view, we've had body candlestick closing above this area. But again, as much as that has happened, I've always told you guys there's something we call direct consumption of liquidity and indirect consumption of liquidity. So the strongest zone in this structure, we have this area, and we have this extreme point for type 1. If you narrow down here, you're going to have some sort of reactive liquidity engineering. So two things. Either price will come and react on this liquidity engineering and sell before it buys, or you're going to get another reason to sell from that area. So for gold, there's what we call shift confirmation. Gold. We've had a transition here. Liquidation for the pullback has ended. I think there's a full consumption of liquidity here. So for this high to be broken, then I'm going to check on what structures do we have on 30 minutes. What structure? This high was okay. This high. This high first break of structure on this. So I think we're also going to have a same scenario. We'll be selling on the extreme point before we buy. But let me check on 1 hour and then I'll check on 30 minutes. So if you check on 31 hour, we have an inducement around this area, which means we might be having sales from these zones, either here. The price will be coming to around this level, Saki zone, before we continue buying. So same scenario as well for gold. Since I was on weekly 4-hour cycle, I'm gonna check on 30 minutes. Yeah, this zone is kind of crucial. This zone is kind of crucial, especially here. Because if you understand liquidation as well, look at this. We had this level. Let me show you. These are the buys I was talking about. Those guys who are keen, you're not supposed to miss these buys. Price caused this impure liquidity, and then the market came back to the impure liquidity. Boom. So there's also a possibility of us having another reaction around this area. You know, that's around 36.15, 36.60 levels to 36.65. So we might have a reaction here before we push up. So that simply means since we have these types of liquidity or another structure, this area has not been, the buyers are still in control. The sellers have not yet fully regained price. We'll just have a slight push to the downside and then we continue to the bullish trend. Right? So let's go back to 4 hours. You realize those areas that I'm talking about, like this one, it's a week overlap, which gives me even much confidence. If I go back to weekly, we can't really see a lot of information on weekly, but our invalidation remains intact, which means for us to continue buying, yeah, since price has come to react on this area, so that simply means we'll continue buying. So we'll just have slight pullbacks for sales, and then we continue pushing to the upside. That is on gold. So once the market opens, probably we'll be looking for some slight sales. I'll give also updates during the London session. If we'll have mature setups, clear setups, we'll be executing them tomorrow. If not so, we'll be waiting up to Tuesday, Wednesday. So just expect us to have some sales. I'll give clarity on this in the morning. So and then once price comes around this area, boom, we might be breaking those highs. So if you check gold moves, it's a very volatile assets. Just from there to this area is around 400 pips. So we need to capture these pips. So I'll be giving out clarity on the same so that we don't miss those trades. Because guys, time has really moved a lot. I don't want to put here. So let's embark from this session where we've just left. I'm also tired. I won't lie. Let's just embark from this tomorrow. during the London session on our live Discord stream. Please make sure you join. Don't be reminded. Make sure you join our session tomorrow at 9:30 a.m. Kenyan time. Those who are not there, that means you have not qualified to be in our Discord. Maybe there's something that you need to do so that you can get the premium stars there. Then maybe Veli or Andrew or anyone has something to say before we wrap it up.
On my end, I got nothing to say. Junajua,
Yes.
just some zones. So let me refine my Euro JPY and my GBP JPY. Refine it. And then tupatane pale Discord kesho. Majaliwa.
Sawa. Make sure you share. Make sure you'll share all those setups there tomorrow so
Yeah, I
that
will.
you can catch up. Anyway,
Okay, me, I wish
thank you
everyone
so much.
a fantastic week ahead. Eh?
Yeah,
I wish
sure.
everyone a fantastic week ahead. I'm sure it's gonna be a good week. Coaches, umesema umekuja na goodies, so we expect those blessings.
Yeah, sure. Make sure. Someone was joking on my status. Alikuwa ananiambia ninakaa ni kama nimekuja na signals. Enyewe nimekuja na signals. Anyway, so you guys, I'll wrap it by saying this. Any day, anytime, when you're facing your charts, risk management is key. Before you take that trade, you need to have a reason why you're buying, selling. It could be an intraday, it could be a swing trade, it could be a position trade. But since time has gone, tomorrow, I think I'll do a session for like 1 hour, 30 minutes. I'll also give other traders in the community a chance to share what they have in mind. So for now, you guys have a lovely night, and don't miss to join tomorrow's live Discord stream at 9:30 a.m. You guys have a beautiful week, and cheers.